5:27 a.m. Pacific Standard Time. What does that mean? We're 3 minutes away from that GDP revision. It's going to be the GDP second estimate, GDP deflator second estimate, and then later on we have the Chicago PMI. How about that? Ding, ding, ding. And crude inventories. Well, the most important one is, where is the Mr. Federal Reserve? Where is he? They call him Mr. Ben there. That Fed's beige book will be released at 1400. And the PMI will be at 945. The deflator, your GDP, as I call it. And the reason why I use these little slogans in this MMT is because if they would quit manipulating and get the right numbers with par sub growth, then we would have a much better environment. The consumer confidence yesterday was at record highs. One of the things that was disturbing, though, was the durable orders yesterday. They were down. Yep. The actual number on that, minus 4.0%. So we're going to see how the stimuluses that are occurring around the world and here in the U.S. are helping out with these reported economic indicators and how they go through the numbers. And, you know, everybody wants a number to be good. Sure. Who doesn't? I hope they are. But the problem is they're not organic growth. Lower growth. You know, everybody was at 3.5%, 4%. Mr. Geithner last year, Mr. Bernanke last year, they had to come out and admit they were wrong. However, our forecast was right around that 1.5%. We do have all of those live analyses on stockmarketfunding.com that you can go back and look at and review. Now, as these numbers come out, that is either going to change or add to the bull fire. This is pre-market. You have to understand that there will be knee-jerk reactions in these numbers. And I can show you right now here in the futures market live in the E-mini 100. So as the number comes out, look at the big fat candle right here in the Nasdaq 100 futures. Okay, now having said that, we're going to pull over and see if the S&P had any you know, a lot of that is contributed to Apple Computer over here at 539. Okay, and we're going to continue to monitor not only the market cap that it is, it's over 500 billion now. How about that wonderful move? Ka-ching. Here it is. When we go up in the price channel, we're going to look for that price channel exhaustion. Q4 GDP 3.0%. GDP deflator 0.9%. Q4 versus 0.4%. That was the prior estimate. So we can see that the numbers, well, there's not much of a knee-jerk reaction. The Dow is at 1316, above that golden 13,000 that everybody's been waiting for. Those are those 2008 huge reversal levels when the original financial crisis started. Right now, I will maintain that the upper end of the price channel will get more exhaustion, and at that time, you are going to want to fade that short to that bull pullback. But remember, when you're in the price exhaustion channels, you will still bounce off of the support level right smack into the resistance level where that price channel will be weak and price will start to fade. This is what we are using to get the entry. The entry or the engagement, the entry has to be at the upper resistance levels and the lower support levels within the 3, 5, 7, 9 scripts that we have in the SMF platform. They will work. and it's scaling those support levels with limit orders, and it's also scaling those top end exhaustion channels at resistance levels with shorts. It's not like you're going to get all day, but you know, nothing can just go one way. And the higher that we get, you're going to be looking for reversal wicks at resistance, just like this. MMT, that you will. Let's be very observant at where the delta expansions are up here at the higher end, and they only can go so high, and you will have intraday where stocks will sell down just like that from their high real quick, and then bam, you got to cover and get net long how far it goes, and they'll stop right below them. But in reference to your trade management in less than an hour from now, intraday stocks are going to hit that upper channel. We'll cover some other stuff. But this is Nasdaq 100. That means when the Googles go up here, like yesterday, every stock on an intraday level, the previous day's close, and happy loop year, what do they call it? I'm just kidding the way I say it. Leap year is here, 2/29/2012. Super gap. What you're going to find out on the opening bell, in the first 15 minutes, an apple's going to go up and it's going to hit a really hardcore resistance level, and it's going to pull back $3, just as we have done it in the last 2 consecutive trading days. Yes, we did, and we're ringing the cash register on that one. Ding, ding. Price exhaustion into resistance levels have a tendency of falling very weak and closing below the previous half bar, and then you come down, you come back up, you test it, but then you start to roll over. That's when you know your upper end of the price channel. That means a bull starts to get wore out. The bull starts to get wore out. And what you will see on individual equities that meet the SMF requirement, yes, is that within the shorter 60-day 2012 calendar year, that when bull runs get exhausted, there will be changes. They take time. You can stay in a price exhaustion channel for a number of days. And we always monitor the first week, then the second week, then the third week, then the fourth week, where we're going to be closing out 2 months as of today. And everyone is wound up for what? For what? Dow 13,000. The old trick. Let's get the money off the sideline. Sits on the sideline for a reason, because they don't believe in it. And the most important reason is that even if they are going to start believing in it, then guess what? They're going to want to buy. That's where that money off that sideline gets into play. Bull exhaustion channels have a trade management system that we developed clearly to identify the higher end of the exhaustion reversal and getting net long off of that key support level and walking that thing right back up where you exit out to the public and ring that cash register. Ring, ring. Price channel exhaustions will have upper channel resistance levels and lower channel support levels within the 3, 5, 7, 9 teeny breakout to the bull side, and a 3, 5 teeny reversal within the price exhaustion channel. Now, having said all of that, we understand one thing, the golden rule. It's a time series. Sometimes they happen right away. Sometimes they take all day. However, when one is patient and disciplined and observant and monitoring the script, the price script, the market maker script, between where he's a buyer on the lower end of the teeny price and a seller at the higher end of that teeny expansion price. So, you know, a combination of intraday teenies long and short, the bull is still going to be strong at support until you get to see more things that would look like this, and this is what you're looking for. But then after they do that, you have to go long because they come right back up, and this is how they've been trading. Now, having said that, it will remain that way. And even the first pullback that we do get from this overbought area, which could come any day, right now we're going to deal with today. And this is what equities will do intraday. Right here. Nasdaq 100, equity prices, top end resistance shorts. You'll be looking at them just like that, MMT. Yes, you will. Only just remember that at some point, the resistance levels is become a wall of resistance in price. And when they hit there and you have the limit order up above the price channel in the actual script and you get hit, bam, they drop very quickly. And they will drop like that, but then you have to take your profit. And as you're taking your profit, you can go net long and sell right back into resistance or right back into half of the wick, because you'd have to use in your application half of that wick. You buy out the bottom, you'd sell right into it, and you would be limiting out on that side. Yes, that's the kind of market maker debit structure within the transaction model at support and resistances, understanding where the bull exhaustion is, understanding where the wall of resistance on the individual equities that you work together as a team and you apply those upper end of those resistance levels in the price channel, where you will see clearly today that the upper delta will do you will slide. You'll hit that resistance and they'll come down. Now, just remember, there's not a lot of sellers in the market because there's not a whole lot of bulls up to this high yet. There's still a lot of them on the sideline. All of the economic and all of the other stuff doesn't matter. It's already currently factored in this morning's price ranges and today's trading ranges. So all of the news and all of the headlines are factored in the overbought bull process. So let us not be fooled about the upper end of the resistance. Please get those shorts. Buy off of the support level. We're going to be, and remember, once you do get that pullback, and let's say that on the opening bell, MMT, you get the low on a name like Google. Say you get hit down here at 609.50, and then they walk it back to the 622 area. That lower support level, and like with Apple, what are we going to do with it? It's going to go straight up. It's going to be exhausted on the open, and it's going to pull back a quick $1.70, $1.80, maybe $2.50 on the pullback when we get to that opening bell in 50 minutes from now. Okay? In pre-market, you can see how those prices are leveraging up to highs, and people chase them until they become very exhausted with a reversal. MMT. Yes. And that's how it will happen. Remember, what people got to understand, that within bull rallies at the high end of an overbought, broader market, broader sectors, all in bull mode. However, what happens is that there has to be an area of where that wall of resistance becomes so overwhelming in price, and they just reverse, only because of one reason, MMT, because they're so overbought within the price channel. This is the reason why. And you don't have to fear resistance levels in price. No. In bull runs, as we progressively close out the first 2 calendar months of 2/29/2012, being the last trading day today, being a gap, being a weekly options expiration week, lots of data, lots of things happening. Where does the bull is priced to sell? Buy the rumor, sell the news. When does this come back into the tape? Not just that, but many other things. many other things that happen on making a market with the public. Where the buyer is in control and where the seller, well, there isn't any more there. And the reversal comes into play. So this way, MMT, you're constantly getting that support level entry. And once again, you're constantly getting something like this. When they trend up like this, they sell off. And now equities will do this during the day. I'm just using the E-mini Nasdaq 100 because the leadership stocks in pre-market are a part of what creates a move anyway. Knock, knock. Who's there? So look at the gaps as they increase. And look and see where, once you buy, and this is the example where that entry off of that long side at that support level, you got to snap that buy. Yes, you do. When you cover the short, you're just going to buy back double the amount, and then off you go. And then sell into resistance. Half of the down move. This is the way that you're going to look at things on an intraday level today on the opening bell in the first hourly print. Yes, you will. Once that first hour of that tape, that first 15 minutes gets out of the way, how to trade that opening bell. Yes, MMT. What are you doing? You're not trading it. You're making a market between the buyer and the seller, who is the public model. That's what you're doing. So the trend is that when you get short intraday, you long, you selling into it at resistance levels. And this is what they would look like. Here, I will draw you another trend line. MMT. Horizontal one at that. Now, take a look. Right there is the top of that first reversal. This is what equities will do intraday. And that would be like, your short move. But then you got to get net long right back up to that resistance channel. And equities will come down and hit support just like this. And then they'll roll right in their price channel. Look at that. Here, let's just take let's just put that right there. And let's narrow it as we can see that right here. This is what equities will look like. And they will be in their range. They'll have their pullback range. Then they'll have their long range. Pullback short range. Pullback bull entry. Bam, bam, bam. Selling into that spike. Look at that. And equities can spike up there. That's why it's good to have those limit orders up above the market. They're called flash trades. MMT. This is the way your intraday is going to set up in the price exhaustion level on all of these key indexes right here. Dow Jones, Nasdaq 100, Nasdaq Comp, and S&P 500 MMT. I got to tell you. And once again, MMT, within the directional price movement of the actual ranges within the leadership bull side equity platform is buying that support, selling into the resistance, reversals and how they set up on an intraday level in the equities, how they have their first pullback phases, how they bounce and test, but guess what? Right at the test, you have this big red 2 bars that confirm you that pullback is still in play, and that's a verifier. Yes, equities will come down and hit their support levels from their original breakouts. They will test half bar breakouts, okay? Because they will. So, and you'll have to get long on the other side when this green bar, see, when you put the bottom in and you start moving, you don't want to be buying up here. You want to be getting it right here when it clears that red bar right there. The top of the red bar, even if you're getting in right there on an equity price, and then letting it set itself up, consolidate itself, then get its final peak. That's the reversal right now from that intraday high. And this is what you will be looking for today. Within the actual today's price range between the public buyer, seller. Let's keep that part of it very coherent. Your market maker capabilities are outstandingly up to par for you to take advantage of support and resistance levels within today's price range. The ones that are the most overbought, remember the overbought is overbought. So what? But what we look at is what that price range is and how long does the price range stay at that overbought level, that the bull rally right now at this very moment and continuing looking forward is a cautionary period that they should be looking at themselves, because once again, establishing price resistance and the price action resistance, higher overbought levels. How they respond, they have to reverse like this intraday when you're in your equity now. And they got to break below it. Now, of course, yesterday, the ISRG, it had a little trade from resistance levels. It's pulled back $6. One of the things about shorting stocks at their very highest levels is you don't want to short them when they're down $10. No. You got to be up there at the high end of that price exhaustion channel with your live entry, and it will do you justice. The names that you're going to be looking at will be all the names that we look at. Signup was a mover yesterday. Big shorts got squeezed out of it. We're going to be looking at that trade. Netflix, it wound up yesterday toward the highs and pulled back $2. There was a great intraday price exhaustion on Netflix when it got to the top end of the channel, and it reversed and came down and then got support. And now, you know, it's trying to hold the close with the small little gap with the futures market right now. So watch the resistance levels when they get up there. You run up to 115.90 or so, 115.60, you'd be looking at, okay, that's got to be a wall of price resistance. Sure enough, bellwether price line, here it is. Made highs yesterday. All eyes on that one. Either look for a blow off top and or a lower high at a reversal point. You would engage at that moment and go exactly with that price, that resistance. Apple is going to be, as it opens up in another 40 minutes from now, it's going to hit the high end, and people are trying to sell short right now. There are traders right now trying to sell short Apple here right now in pre-market. This is a special pre-market for the MMT because, once again, as you've been being taught in bull rallies, last year you were being taught in bear rallies. Now we're in bull rallies. In bull rallies up at the top, they hit that wall of resistance and they're going to roll over. And you can get paid, and then at that support level, once again, you're going to get that transaction at that teeny support level, and you're going to go up and make another positive debit. So you can sit here and make money on both sides of the market all day. Have a good day, and I will see you on the opening bell. We'll go over prices now off the live trading update, and you're going to look for flash trades to the upper resistance levels. So I already know I'm going to put one out here at 115.60 just in case he does flash it up there. I have all to gain and very little to lose. Yeah, that's right. And on this one right here, as I see them develop to shorts here in pre-market, I'm going to put my short out over here at 142.25 cents. 542.32 cents. Goes right up there. I have that limit order out there. It hits it. It deflates immediately. I buy the cover. I am paid, and it got support, and I go long. Intraday, every day, off of that support level. Special presentation, trade management, bull exhaustion management, intraday higher price, channel exhaustion management, entry, exit, support levels to buy at support, sell into resistance. what equities are doing. This one right here, that Signup, I'm going to put an order out to sell short. Once again, I'm going to go to the upper end. The upper end of that price channel is probably going to be 72.46 So I'll put a limit order out up there. On the support side down here, well, I'm going to put one down around 67.75. That way I've got both my long side at support covered and my wall of resistance limit order out to if we run up there and it spikes and once it hits it, and that's how we do things. What will we do with Google? It's very simple. We'll put a short out here at 622.75 on the upper end of that spike. Yeah, and if we want to get net long, what we're going to do is put limit orders out there. And how you can see it, 619.30. We'll go ahead and put a drop down bid at right around 611.75 pennies on that entry. Yes, we will. That's that drop down bid. It works both ways. But we've capped the entry at 611.75 pennies. That's that lower end of that support level. Go ahead and look in your MMT platform. 622.75. In that area is a spike to resistance with the short. So once again, let's get into your channeling ranges and have a good trading day.